You are listening to Mining Stock Education.
I had a meal with a junior mining executive, and he told me about a retail investor that bought in the open market well over 1 million of his shares at 3 cents. And then it was about 7 years later that his stock traded as high as $4. And that particular retail investor made it an amazing amount of cash. Thanks for tuning in to MSE. I'm your host, Bill Powers, along with my co-host, Brian Lenny, who also writes a newsletter at juniorstockreview.com. Brian, I saw you and spent some time with you at Metals Investor Forum last weekend, as well as PDAC. You were there more days than I was. You presented at both conferences. Let's kick it off by getting your reflections on some of your key takeaways of those two conferences, please.
Sure. I was really encouraged in January when we both were at the MIF show in January in VRIC the following 2 days. And then, so I was looking forward to this mainly from an audience perspective, seeing how many retail investors were going to come. And I would have to say from that perspective, I was a little bit disappointing. I thought that it fell a little short on both accounts, both at Metals Investors Forum and PDAC. It still felt very much like an industrial event where it was mainly people that are already in this industry, either working or sort of the diehard investors that you sort of always run into. That said, I think the biggest difference that I saw, especially on the retail investor front, was the guys that I talked to that were somewhat new to the sector were very optimistic and wanted to ask questions. And so the quantity may not be there, but I would say that the quality was certainly there. And I think that's meaningful. And I think that's probably evidence of a definite change in the market, that it's beginning to attract new people to the sector, albeit in smaller amounts. And next to that, like from a perspective of an investor, I had some great meetings with companies, and the sentiment and the sort of direction of a lot of companies, I think, is looking much better. And I think that's indication that there is money flowing back in. Companies are looking further out into what they're doing, and I find it very exciting. I see so much opportunity, and it's maybe a little bit overwhelming from that perspective.
The conversation you and I had at Metals Investor Forum, as you just stand and you talk to people and then you move and then you talk to somebody else, is about how retail is always bag holders. And I said that perhaps this time around, there'll be a greater percentage of retail that is a little smarter due to the proliferation of education that's out there. Since when I started in 2015, there was not a lot on the internet. And you gave pushback and you said, no, Bill, they're not going to be smarter. Retail will always be bag holders. Maybe share your thoughts on that.
Sure. That might be a little bit too pessimistic, but what I think is, especially, it almost alludes to what I was just saying, was that the quantity may not be there, but the quality is there, and there's good questions, and those existing investors that you and I both know have been here the whole time. And so I think that the amount of people that you talk to, especially right now, if you're reflecting on what it represents in the market, it does reflect probably a higher tier of investor. But I think that the adage that, seemingly most things don't change, and I would say that the retail investor will continue to be, unfortunately, the bag holder, and it'll be their own fault because they will chase momentum, they'll forget to sell, and those things almost maybe are innate to human nature. And unless you're doing this full time or really take it seriously, I'm not sure that you look to make or put that wall in terms of how you participate in the sector and really eliminate the emotions that can rile up in anybody, especially if you're in a bull market. And that's what attracts the masses, that momentum of making money, seeing your neighbor or your friend making 10 baggers or 5 baggers. This is what attracts people. And unfortunately, their brain doesn't always come with it. It's all emotion based. But what do you think? Like, you made a good point, and I don't want to discount it, because you said, the availability of educational products out there has never been better. It's quite obvious. So why don't you talk more about that?
Well, like when I listen to some of the old timers that talk about when exploration in juniors took off in the 80s and 90s, and like if you wanted to find out what's going on, like there was once a year updates when you would order materials, right? And you'd get that, and the CEO could have sold his shares and declared it, 11 months ago, but the flow of information, it's not readily available to where you could get an alert on your phone when you sign up for it if a CEO in a company that you own sells his shares. Or where there was like that channel hold of information lock where a lot of it came through the brokers, where you relied on your broker to access information. Now it's democratized. There's podcasts, there's information platforms. You can reach out to people readily. And if they don't respond, that's usually an avoid, like you told me, Bill, I'll never invest unless I can talk to the CEO. And you're not being a prima donna, but you have questions that you don't just want the standard IR person to answer. You want to talk to the person in charge and get those questions answered. And, in past times, perhaps it wasn't like that. But I hear your point about the psychology of humans, right? That we are who we are. And for example, years ago, I had a 5-bagger on a certain stock that I featured. And someone asked me, well, how did you navigate that? And I said, well, I 5-bagged on it. And they didn't like it because it was a featured company. But I'm like, what do you, if this is a cyclical industry, if you're sitting on a 5-bagger, you have to at least take some money off the table, because the 5-bagger, it could drop by 80% in the next 2 years if the cycle turns over. If copper goes from 550 back down to 390, the thing's going to turn over. So you have to figure out how this sector works. And I was listening to Rick Rule at VRIC, and he's going through companies that he owns. And he said he invests in Amir Adnani companies, okay? Now, neither you or I invest in any of his companies, but Rick does. And what Rick said, he said, and I heard him say previously, that he likes that Amir gives him a lower cost of capital for the company because he's so good at marketing. And Rick said publicly, he said, I own the company, but when his marketing really takes off and it becomes overvalued, I sell it, and I wait for the people who bought him the promotion to sell it back to me at a lower price. And isn't that how you have to approach this sector?
It is. It is and it isn't. I guess I go a little bit further, and I think that that investors need to understand exactly what they own and play it accordingly. And so whether it's Amir or any company or a group of companies, you need to fully understand what you're buying. And some companies are set up for promotions, and typically those companies that are most apt to attract people are going to have projects and styles that associate with just that. It's usually high number of ounces in the ground. They're typically not your cream of the crop or best of best projects. And so those things work best in bull markets or the run-ups to bull markets, because you can sell the fact that these ounces are going to have so much more torque or leverage to the metal price. And that's always the thing. And the other point is that usually that those companies are not valued in the down portions of the cycle. Like, you can still make money with good companies in bad parts of the cycle. They just attract smart money. They're doing things regardless, or they're able to raise money and do things regardless of where the market cycle is. And so you get news flow, and you get these things that can kind of run on themselves, and you can make money. G Mining, Montage, 2 wins that I've been public about, and it was the exact same thing. It was, decent projects with very good people involved, and we were able to take profits in a medium market, maybe at best, last year. And so what I'm trying to say is, investors can understand what they're actually invested in and then plan accordingly. When it comes to selling, like, there will be points when stuff becomes fairly valued or overvalued, and that's the best time to offload it. Then again, in a promotional stock, that you're absolutely right. If it runs and then the market is with it, you have to take even more advantage of that upswing, because typically those things look like a mountain. It's a huge rise up and then a huge rise down at some point.
Ryan, what does 15-minute due diligence look like for you? And I'll give you an example from me. I was asked to look at a company about a month ago, hot commodity, and it ran up to a $60 million Canadian market cap. I think it might have been 45 million or something like that when I looked at it. So the first 15 minutes, what I do, I type the company name into YouTube and just see what comes up. I pull up the chart, I pull up the chat room, and I started playing the CEO interview. There was only like 2 of them out there, so it wasn't like so widely known on the internet in terms of the CEO giving the message out. Looked at the chart. It ran up from like 14 cents to $1 last year. And then there was a huge red candle down from like $1 down to like 40 cents in like a few trading days, right? So that immediately is like, okay, wait, what's going on there? Quick, pulled up the presentation and saw that they had 3 very early stage projects, including 2 historical mines, which they acquired during the run-up of this niche commodity. So immediately, like my first perception is, okay, they're just trying to take advantage of the run-up in this niche commodity. You just go grab a couple projects that you can then market, and boom, you're at a $60 million Canadian market cap. So that alone is like, I'm not going to touch that, right? And then listening to the CEO, again, the 15-minute due diligence, he was asked, in the interview asked him a really good question that, what is this red candle, that you get a 60% drop off in such a short period of time? Why this red candle? And the CEO's answer was, well, there's a movement called Save Canadian Mining about how the naked shorts attack companies like ours with naked shorts. And I was like, that's the worst answer you could ever give. Like, you could just say the 4-month hold came off of the stock. Come on. Like, even to justify a $25 million market cap with 3 early stage projects that are nowhere near drilling, years and years, decades or more away from productions, perhaps. So that was a turnoff. And then that was, of course, a no. And I just give that as an example, especially for newer people to this sector. Like, what does 15-minute due diligence look like? That was one example on my side. What about you?
Yeah, very similar. Probably the first thing is to go to the website, look who's involved, the management team and the board, especially if I know the people or someone in there. That obviously makes a big difference. Then I look at the corporate deck, try to understand what the company's all about, whether they're developing, exploring, and their share structure, what that looks like. Probably most importantly, what the market cap is. I think I've done enough valuations that I can sort of tell if there's delta there, meaning delta between price and value, just from looking at the market cap and sort of understanding what they have in terms of projects, if it's a 43-101 resource or not. And right there, I can make and that might even be a 7-minute look. And really, if it passes the 7-minute one, then I'm probably more inclined to ask for a phone call and go on from there. So
would you ask for the phone call before you read the MD&A?
It depends.
Because that's usually my next step.
Yeah. I don't know if I can necessarily, if I know somebody, then I'll ask for a phone call probably sooner than later, especially if I see them in a good light, then I'm more apt to jump right to the phone conversation, spend the half hour talking and see what comes out of that. The market cap to me tells you so much about where that company is, especially if you look at what commodity they're dealing with and where they are in sort of the development cycle. And yeah, like I said, like I've done it enough times that I sort of know how much room there is there. And again, like people that I know, I'm more willing to give the benefit of the doubt that even if the delta is maybe a little bit smaller, that I'll still have a conversation and try to understand what's going on with the company, what they're doing. And at the very least, that goes on a list of mine. In case that share price does go down, that there's maybe a follow-up phone call or more thoughts to have. I guess I'm so much quicker to dismiss things, especially these days, because you can get so bogged down with information. That's why I say PDAC was almost overwhelming for me, how many new things I was bombarded with, and sorting through that and sort of simplifying it for myself has been something that really helps me. And so the quicker I can get rid of it, the better, especially without having a conversation.
Did the gems that you did they come through conversations? And I'll just say this, you taught me years ago, like I think we met in 2018 for the first time. I think we spent time together on a site tour in 2019 and really got to know each other. And you always said, I go to the conferences to talk to people. And even when I saw you at MIF, I'm like, so have you sat in on any of the sessions? You said no, and you laughed. except the one you spoke in. But so it's all about people, right? And like, as someone who doesn't drink, you taught me too, the best time to talk to people is when they're having a drink, and then they're having another drink, and then their guards come down and their mouth starts to run. And perhaps that's one of my competitive advantages. If I go out and everybody starts drinking and I don't, and then I'm just taking it all in and I'm just listening to what's being said. Any thoughts?
Yeah, that's right. Well, you're absolutely right. I go there more than ever. It's to talk to fellow investors and people in the sector that I know and respect their opinion. That's really what it's all about for me. And the other thing is having FaceTime with the existing companies in my portfolio. Like you can do a ton of Zooms, but there's nothing like talking one-on-one, going through a deck or going through a news release with that CEO that I've been invested with for a while, and sort of chatting not only just about that, but just the other things that are going on in the market. To me, nothing compares to it. The side note, in terms of the best advantage, I would say the best advantage for that sort of parlance between not drinking and drinking, it's especially if it's someone new. The people that I like and want to hear from on a regular basis, whether they drink or not, doesn't matter to me, because usually we have a good dialogue anyways. But if you're trying to get to know somebody, especially a new CEO or a new team of people, then yeah, it can be very revealing into how that company runs, the different things that are going on, because people do get looser. And I think that is a net good thing. But you know what? The best people, the best semblance to me of a good company and good people is that they'll talk to you basically the same way, whether they've had a drink or not. And maybe that's the biggest indication that you are surrounded, or you're potentially investing in a good person, is that, they're straight up and forward with whatever is going on. It's not a big secret. And I think even more so on this trip, though, like I was reflecting this morning on, actually our conversation from yesterday that we did offline. And there's a few things that came up that I'm not even really sure how to necessarily talk about here, but I was reflecting on people and the perception of other people, reputations, how different situations can be interpreted by the various people depending on, let's like say a management team that you've made money on before, and maybe don't have a lot of experience with, but they did make you money. You get into their next deal and you're very positive of where things are headed. Then someone tells you something reputational wise, and it sort of opens up your eyes. And I think definitely the inclination is to sort of dismiss it and kind of move forward. But I think, more and more you have to understand the person that told you this thing about the reputation, and understand that situation, and maybe really put that as a bigger marker, because the more I've been in this business, reputation matters so much. And the straight shooters that I know, they there's usually never any questions about their morality, about the way they conduct themselves, the way that they put shareholders and obviously themselves, because they're usually going to be just as exposed to the company, the ups and downs, as you are. So that reputation matters. And I think, the more I talk to people, the more I understand reputations and the things that go on, the more important it is for me, especially from people that I respect, to understand their experiences with the other people in this sector. And it matters. It matters a lot.
So I called you 6 weeks ago and I said, Brian, I was pitched this silver deal. And, it's a piece of garbage. I didn't need your help discerning that one. I said, it's a piece of garbage. And the guy, he was raising money. A promoter was raising money. Okay. I had heard about this promoter. He emailed me out of the blue. Do you want to participate in this? So I went to the website, like you said, looked at it. It looked too small. I pulled up the MD&A. I wrote him back. I said, thanks for thinking about me, but I'll take a pass. He wrote back. He's like, no, Bill, you really don't miss this opportunity. There's a super wealthy guy involved in this, and, this could be the next big one. And the guy he mentioned, I actually know. I've talked to on the phone a couple times. So I said, I know him. But I also read the MD&A, and that guy had a huge convertible debenture, Furthermore, management had accumulated like upwards of 7 figures of back pay for themselves. You know, when people say they're not paying themselves as an investor, you all got to look at the MD&A because they could have $1.2 million of back pay. So you go raise $4 million and they're going to pay themselves back 1.2. And then they got the debenture holder, right? He gets paid back either in cash or he's going to get shares at 5 cents when you're buying them in the open market at 27 cents. So I wrote back, I said, no, thank you. But then I said this, I said, if you have at least a tier 2 project or better, I'll take a look at it. And I told you in the phone call, and what did you tell me?
I honestly, I don't remember specifically.
Okay, this is what you told me. You said, Bill, if a guy pitched a project like that to me, I would never take his phone call or look at anything he would present me again. And I said, wow, that Brian, like, you know, deal flow, right? Like you can discern that on your own, but you're like, no, I'm bringing it up because of reputation. You just mentioned reputation. So a guy pitches me a garbage deal. I said no. He came back and tried to come at me again. I said no. But I said, I left the door open when I said, at least bring me a tier 2 project. I'll look at it under the right circumstances. And you said, no, I won't even look at that from that guy.
Yeah. Yeah. No, I know exactly what you're talking about now. Yes, that's how I approached it. And it becomes even more so that way, Bill, if it's somebody that I'm friendly with, that tries to pitch me garbage and move forward with it. It's that sliding scale. So it's definitely one thing if somebody that I have no idea cold calls me and says, hey, you should look at this, goes through the sales thing, doesn't want to take any of my rebukes to their promotion. And then, yeah, I quite easily, but it's a scale too. It's like, you know, and this is exactly what I was talking about in my, but like I said, I don't necessarily know how to explain it. But it's bang on. It's basically somebody that I am definitely friendly with. They very good in sales. Didn't want to take my rebukes to some of the things that they said. And that sort of thing is the difference between a straight shooter and I think of just pure salesman. And that stuff, you know, goes in my head mainly, but you can picture it as being written down in a book, that you have to be super careful with that person, because you know that under any circumstance, they will try to sell you anything. And any words, anything that they say is all revolving around selling the shares or getting you as a shareholder. It has nothing to do with their actual perception of more, I guess it does, their perception of you, that you're either dumb enough to fall for it or you know, they obviously don't value enough. And so that, like I said, it's so much more meaningful when somebody that, you know, again, you're friendly with or whatever tries to do that. And so that's absolutely how I work. And so if anybody is looking to cold call me or sell me on a crap story, then know that you're going to be put on that list of people I have no intention of ever investing in, and you're wasting your time trying to pitch me.
One of my favorite conversations from this past weekend was between you, me, and Rob Brueggemann from Abra Silver. He's the chairman. And Rob and I were talking and reflecting. When I was newer to the sector, 2018, I believe it was, I was buying Abra Silver in the low 20-cent range, bought it all the way down to the 6-cent range. And at the time, Rob was an advisor, and I would call him for updates, and they were horrible at communication at the time. They were horrible at marketing at the time. And I remember just saying, you know, I don't know if this is going to turn around. You're right. They had the deposit. They had the no mineralization. It was Argentina. And I said, is this going to turn around? Long story short, I sold. And Rob and I were chatting about that. And he acknowledged at the time, he's like, you don't know in those circumstances if things are going to turn around for you as the shareholder. However, I said to you, but Brian, when I sold at 6 cents, you bought at 6 cents, but you corrected me. What did you say?
Yeah. Well, I was buying actually like around 3.
Exactly.
So, and I think where you're going with this, like the perception is so much different depending on price, and it's also your experience,
but also uncertainty, though, right, Brian? Like I started at 20, and so the uncertainty of, is it better to just take this loss, offset a win from a tax perspective, and move on? But you're buying at 3 cents, you're coming in and you're saying the risk reward for you okay, I could really do well here at this point. But there's still I guess what I'm pointing out for investors, because someone could say, oh, Bill, you made the wrong decision. Brian made the right decision. But when I talked about this with you before, you told me, you said, no, Bill, you made the right decision for you at the time, and I made the right decision for me. But you made a 15 or 20x though, and I didn't.
and that's just circumstance, right? When you made that original purchase, you made it, I think, based off the right decisions. And that's going back, and I think that was like 2017, 2018, maybe.
It could have been 2017, yeah, whatever it was.
And so, we had just come off that rip-roaring bull market in 2016. I remember what Abra Plata at the time looked like.
Yes.
It was like, was it perfect? No, absolutely. And Argentina hasn't really looked appetizing until probably the last year or so since Milei got in. So, there was definitely some risk, but I could see the upside 100%. I could see it from your entry point. But just like markets do, things seemingly get cheaper in the wrong portions of the cycle. Those guys were struggling because their management team was sort of falling apart, and you did the right thing to sell that. The thing is it got so cheap, and it did a deal with another company, Afound Minerals at the time, that had a bunch of cash, that it was right, or it was right for me, and it did turn out really well, but honestly, and I was aware of this, it may not have. It may have gone down to a penny or completely blown up, and that's always the risk with junior resource sector investing. But if you do have the courage when it is that low, and you sort of do have a good understanding of the value in that company and sort of where it can go, then in 2020, that's really when it blasted off. And like you said, at its high, well, even right now, actually, it's trading at about a 20 bagger for me.
Mm. Have you done any private companies recently?
The private companies is a huge topic. No, I haven't. And my experience with private company investing has been quite bad. The biggest loss of my career has come from a private company. This company called Pilar Gold that I invested in back around 2020. And the management team ended up being crooked. Jeremy, I forget what his last name is even now, but these guys took the money with seemingly an interesting project when I got in at a good price, and they run up to getting the Pilar Gold mine back into production. It was a spinoff from Equinox Gold. There was a deal made there, and I thought given where the market was and their plan to go public and put this thing back into production, I thought it made a lot of sense. Turns out it doesn't look like they ever had that plan in mind, siphoning money off. They don't reveal the financials, and they keep on, from my perspective, lying to the market about these other spinouts in Liva Gold and Tucano Gold. And so what they did is they spun assets out of Pilar, put them into these other shells that they control too, and then continue to try to do the same thing. A friend and I have tried to make it as much public as possible that these guys, how they treated us. They treated employees, like in Brazil, for instance, at the Pilar Gold Mine, they stopped paying their employees. There's a number of outstanding debts that they have from these employees, and it's a terrible situation. It's one thing to take my money, but these Brazilians that came there and were working for the company with, a future in mind, and then they don't even get the money back that they intended. So I give the detail in that situation. If anybody, it's just a warning for anybody that's looking at those three companies, but it's also to bring light to the fact, like, that's 100% loss for me. I won't see that money again. And private companies don't give you that outlet to sell, and you can get 5, 10, 15% of your money back. There's no outlet if management goes crooked. You really don't have much of a chance. So from my perspective, you need to be very careful. And if you're going to be going into a private company, make sure it's people that you know and have a direction towards going public. So if you ever do change your mind, that you can actually get that money out of it. So private company investing sounds amazing. You can usually get it fairly cheap compared to the go public RTO or IPO, but it comes with a lot of other risks that investors typically don't understand or have experienced. And so, speaking from someone with experience, be very careful.
And I have 3 private company investments right now that aren't going well, just to your point. So like, I was thinking about this. I've had people tell me their net worth, right? And they're factoring in all their penny stocks, right? It's like, if you're going to do an honest calculation, like I could tell you, if I put some valuation on these private companies that are illiquid, that management in at least one of the cases didn't execute, it's uncertain in another. And in one of them, the management just sent me an email today. They're trying to execute, but boy, if I could have those big checks back. You know, I was talking to somebody who's made tens of millions of dollars in the last 20 years in junior mining stocks. And we were talking about private companies. And I said, like, what is your thoughts on this? And he said, if they're private and they don't intend to go public, I just consider them scams. That was his perspective, Brian. So like when you were pitched that deal, okay, you just said it's 100% loss. Did they tell you we're going public? Was that part of what the forward-looking statement and the business plan that they had said to you?
Definitely. That was the plan, was to go public, especially with the gold market the way it was. It seemed entirely plausible. Like, why wouldn't you? But that's because I obviously was not a good judge of people in this situation, and I thought that they were legit and telling the truth, and I wasn't the only one that obviously put money into it.
But you can never know everything. You can
No,
never
you
know.
can't.
Yeah. See that.
You
So
can't.
like, for example, like anybody can look good on LinkedIn, right? Okay. My 19-year-old son, I was just helping him with his resume just recently. Okay. And it was kind of cool to just see his accomplishments and everything for some things he's applying for. But like, go on LinkedIn and everybody is an all-star. But in reality, not everybody's an all-star. I have a friend who invested in a pre-IPO company, and the management bio was like out of this world, how they talked about themselves. When that pre-IPO company failed, he later met the guy that fired the CEO of the pre-IPO company that he invested in. So when the CEO wrote up his bio and he said, I worked here and I accomplished this there. Oh, yeah. He didn't put, yeah. And then I was fired at the end of it. Okay. So, you know, you never know everything, even when you do your best.
Absolutely. And that just goes to show, though, it's the risk to private companies is, at least in public companies, when you take that risk, you have some sort of an outlet, even though it's certainly not perfect, but you have some sort of outlet that you can sell. But the private companies, really, you're at their mercy. And so, you know, you can be strung along for a while. Actually, I was having a conversation with someone that we both had some interest in. They're based in Europe, and he was talking about the risk of never seeing that money again in the company that he invested in, and like things were going exceptionally well, but they're going so exceptionally well that he didn't necessarily know when that profit point or that out point comes. And it's an eerie perspective, because it can be both. It can be that things are going so well that something perpetuates into the future. And and ultimately, I think in those situations, it's still a very good thing. You're going to sell at a higher multiple and you're going to get that out. I'm just meaning from a timing perspective, because there's nothing you can do with that money, that 10, 20, 100 grand, whatever you invested in them. Even if it's going well, it could be 5-10 years out into the future, especially if it's like exploration based things, where these big ideas can take, 10 years to come to fruition. So, you should have your timeline mixed in with whatever you're investing in all the time.
Brian, because you're a newsletter writer, you get a lot of IR people or third parties presenting ideas to you. About 18 months ago, I had an IR person send me an email wanting to look at a company, and I hadn't responded to a couple emails. And then so in the subject line of it, the person put, Bill, you need to look at our stock. It just went up 6 times in the last 6 months. And I called you and I said, the subject line told me why I wouldn't want to buy your stock. This is junior mining. I don't want to look at the stock that just went up 6x. I want to buy the stock before it goes up 6x. What's your thoughts on that, Brian?
Yeah, absolutely. I can kind of put it two different ways. Both from a valuation standpoint, that's probably 90% of the companies whose share price go up 6 times in that short a time span. Probably you've missed it. The other thing is that most, especially top-notch professional IR people, do not do that, especially if they're a step away from you. It's one thing if they know you and like a sort of a nice or a joke, not a joke, but it's something, between you and I. But especially if they don't know you, that is not the way you approach somebody to invest in the company. And really, you're just trying to spur greed. That's all that is. And like I said, I don't want to discount promotion. Promotion is important. You do want to inspire some greed, to a degree, but you do it in a classy way, in a professional way. And to me, yeah, you're bang on with, especially in the title of the email being that is ridiculous, and I would avoid.
Brian, you mentioned you did good with Montage and G Mining. Now, when they said they were fully funded to production, did they fulfill that? Because I'm bringing it up in the context, I was trying to count. I've been involved in 4 to 6, I'd have to go back, pre-production stories that said we're fully funded to production, and then they're not, and they do another raise. And it's just like, you say, well, can I believe what the executive is saying? And then from the executive side, when you call them and you're like, oh, you told me we were funded to production, they're like, no, I had to do this. I had to protect our downside, so that we could get there. And a number of the stories didn't get there. Mm-hmm. So, I mean, what was your experience with G Mining and Montage?
I would say that most of the time being skeptical on CapEx and how construction is going to go is a very healthy thing for you to do. I think in the case of G Mining, you're talking about probably arguably the best constructing company in the business through G Mining Services, which isn't G Mining Ventures, which is the TSX listed company. The Gignac family has got a record of success, and their ability to do things on time and on budget are sort of unparalleled. This in terms of my experience, my limited experience in looking at construction companies. For me, that perspective, like I was very confident that G Mining had it sorted out. And I think like the biggest thing that I remember hearing when I tried to pitch G Mining to different friends and people in my network was they weren't too crazy about Tocantinzinho. And I think that they were missing the whole point of why you invest in G Mining. And it was because of the Gignacs, and it's because of that track record. And, nobody's perfect, but I think they've shown enough times, especially in the Guyana Shield, that they can construct open pit gold mines, and you're in good hands when it comes to investing in those sorts of people. But generally speaking, it's good to be skeptical, because there's been probably far too many overruns, especially over the last 4 years with COVID and how that spurred inflation, and there's been a lot of mistakes. So it's good to be skeptical about it. De-risk especially if the share price is reacting as the construction process is going on, taking money off the table and not waiting for that big windfall of cash, hopefully when they do that first gold pour or concentrate delivery. So yeah, skeptical is good, but again, you pick the right people, and Montage is sort of the same thing. The Lundins are involved, their group of people. These are the top-notch people that you can invest in the sector. If anybody's going to do it, it's going to be them. And while they're not perfect, I'd still bet on them any day of the week.
On a pre-production story that's like past feasibility study, and they're looking or shopping for a finance package, would you invest in them, or would you wait for that finance package to be solidified?
I wouldn't say it's ubiquitous. It would be situational. It would depend. But usually I think I would wait till after, especially if the team or whatever was new to me. But a lot of it depends on what price they're selling at and how I think that package is going to be constructed. Things have changed so much over the last 2 or 3 years where, we saw, debt, equity, we saw or pieces of different, like a royalty or a stream, equity, and then a debt portion. And I think, that was signified where we were in the cycle. G Mining, that's what they did. They had 3 parts to their financing. Moving forward, I'm not sure that that always giving up a royalty or doing this or doing that makes sense. And so I'd want to try to understand, this is why I'd waited after, is to see what that's going to look like and how that impacts the valuation of the project. The cost of capital is such a big part of it. And it's not only solidifying, but what price you're paying. And again, it goes back to the point where you need to understand what you're investing in. And so probably for waiting after is probably the best thing to do most of the time. So you understand how it impacts the overall valuation.
So we talked about how retail is the bag holders, but we also pointed out you bought Abra Silver at 3 cents. It ran to over 80 cents. I had a meal with a junior mining executive, and he told me about a retail investor that bought in the open market well over 1 million of his shares at 3 cents. And then it was about 7 years later that his stock traded as high as $4. And that particular retail investor made an amazing amount of cash. But there was about 2 years of due diligence that went into that, repeated over a prolonged period of time, 3 cents, 4 cents, 2 cents, purchasing. Then he had the conviction to hold, and then he had the wisdom to sell, right? And that's the opportunity. That's the life-changing opportunity that's out there for listeners. That's what you and I pursue. Otherwise, when you look at it from a risk perspective, like, it doesn't make sense if we're not presented with those type of opportunities. But on the one hand, like, you need to be a trader. I kind of brought that up when I talked about how, like, Rick Rule even says he trades some promotions when he knows the stock gets ahead of itself and he's confident he'll have an opportunity to buy that same stock back cheaper. Okay, so you can look at it from a trader in that sense, but then there's also this long-term perspective. If you're willing to do the due diligence, understand the story and the situation better than somebody else, continue to accumulate, and if you don't have a lot of money and you put 30 grand into this little potential company that's acquiring or in some situation, special situation, that's what this was, and you're confident or it's trending towards you're going to get it and you're willing to place a bet, you put 30 grand, that's a lot of money for some people. Yeah, but 30 grand when it goes up 30 times, when it goes up 90 times, those are life-changing returns for some people.
Oh, for sure. But that's what we all aspire to do, and that's it. There's going to be varying degrees of that sort of success. And, for me, is if you can hang on, most people just need to hang on to hit the bull market, and you can be extremely successful. The problem is, or the reality is in the resource sector, is that it is so cyclical, and there's more probably sideways to down years than there are those portions of the bull market. And so the problem is people blow themselves out before they get there, or they just don't have the fortitude to last. 3 months is too much, let alone 3 years. And my experience, like the big years were 2016 and 2020. I've had some decent years in between, but that's 2 out of 9. And not everybody has the mentality, the fortitude, the courage to be in this sector that long. And maybe it's not even smart for most people to do that. It's confirmed that there's a bull market, and then there's plenty of money to be made. But you just never know when that's going to happen. And often when you have that mentality that you're going to wait, usually you think, oh, there's still too much risk. Still too much risk. So you don't even have the courage to hop in when it's sort of right in front of your face that the bull market is occurring. And
but the flip side is sometimes you don't perceive the risk because your own story, like you sold your house, you rented a house to access capital because you didn't like your engineering job. I'm sharing your story for those that don't know. Yeah. Okay. You tripled your money, right? Which you made a lot of money. And then you were able to leave your job behind, and you've been a full-time investor / newsletter writer since. Okay. But you've said to me multiple times, Bill, I didn't even know the risk that I was taking with like the majority of my net worth at the time.
Yeah. And that's like, ignorance truly is bliss. And I honestly, I don't think that people should follow that at all. I don't think I did it the right way. I was very lucky Oh, well, I think it's a mix. Like
Most
I
people say I'm successful, follow me, Brian. You just said I happen to get lucky, don't follow me.
no, but I want to be realistic because, I think the way my brain works, the experience I've had set me up to have a better chance to be lucky than most people. And if it didn't work out, I was still fine. I was doing exceptionally well in steel manufacturing. I had enough stuff going on in the background, even though I hated it, that I would have been fine. The vast majority, I think, of people that are looking or inspired by that may not be in that sort of position. And so while I want my story, I want to inspire people to take calculated risk. Absolutely. And that's not even just investing, that's just in your life, period. But just do it correctly and work on picking the right companies and picking them when other people aren't,
Okay, Brian, when things go well, like the human nature pride is that we want to take credit for it. Like, I did this, I accomplished it. So like you achieved something great with what you did, right? A 3X and a ton of money for you at the time, which allowed financial freedom. You could move from your job. And you're saying, I didn't have all the facts straight, but I got lucky. Okay. Now, recently, I spent some time with a guy that did really, really well, not in the mining sector, in a different sector, like a biotech. And he said he kept on using the word lucky. And I think I debriefed with you afterward. I said, man, this guy kept on using the word lucky. We were walking and then driving. I got lucky. I invested at a $10 million market cap in this company. And then, it IPO'd on the New York Stock Exchange at $1 billion. And then the Chinese bought the company, he said, for $17 billion. And so he said, I got lucky. And I was just saying to myself, like, that's a good perspective to have, right? Because you can get really high on yourself and then you can put too much money at risk in the next deal because you attributed that all to yourself. Like, you might have had a thesis going in. Maybe you figured out a risk reward profile for this investment when it was a $10 million market cap. But don't tell me you knew that the Chinese were going to buy that company for $17 billion off of the New York Stock Exchange.
No, very true. Very true. Like, for me personally, I make a lot of mistakes, but it's usually not hubris. And so I know that about myself, and I do try to keep a level head. But most of all, like, I just want to communicate that it's not just this easy thing that you do. And it's a constant process of trying to refine your skill set and across your career, across your personal life, where you're trying to get better. And my presentation at Metals Investors Forum in PDAC was probably a lot different than most presentations you'll see. And it was supposed to be. But the first portion of the presentation was centered around the people that have impacted me. And I would credit them with the success I've had because, again, like, it's a learning process, and the way my head works definitely helps. But learning from the experience of others is such a huge thing. And as long as those people are sort of aligned with you in terms of what you want out of the sector, what you want, I guess, out of your life, then listening to other people is a great way to actually learn without making huge mistakes, and mistakes that can knock you out before you've hit that bull market. And it really can create a buffer so that you can start to learn even more. You can get really in the weeds in this sort of thing. And that is the way I look at it. And so it's a constant process for me, learning from those people, learning from you. And like I said, the first portion of our conversation was talking about the availability of educational products. There's never been more availability of information. You still need to be able to sort through it. And then probably most importantly is apply it, and apply the strong emotional side or emotional control side that investing.
Well, I learned from you too, Brian. Like, scripture says, iron sharpens iron. And I was sharing something with you the other day, and then you paused and you said, Bill, do you want to know what I really think? And then you said, your pride was speaking when you said that. And then I texted you, I said, thanks for sharing that, brother, because, we all need each other, right? In terms of developing a network at this, because when you go into small cap speculation and things like that, you don't want to have your pride, because your pride will be your downfall in this risky sector.
Absolutely. Well said.
Anything else as we conclude?
No, I think that's good.
All right. Thank you for listening. Just wanted to chat with Brian, reflecting on the past week of conferences. And we plan on doing this about once a month, where we just chat about the sector and how things are going. So we appreciate your listenership, and we'll catch you on the next one.
Bye.